Welcome. We're going to go ahead and get started. We're expecting a great turnout today, and thank you all for participating in this webinar. I'm going to begin with a brief overview on how this webinar will be run, and then I'll introduce our facilitator. My name is Jessica Alfaro, and I manage the membership services at the Small Business Banking Network. I'm very pleased to have met many of you and communicated with several of you earlier, and then to meet with the rest of you today. We've muted all the voice lines going through to improve the sound quality, but we do encourage you to submit your questions by typing them into the chat box on the GoToWebinar app on the right side of your screen. We'll be asking for input from the audience at a few points in the webinar and then also at the end, and we look forward to hearing your thoughts at those times. We will also record and post this video for those on our web community who missed this webinar or any of you who wish to access it later.
Very, very warm welcome to everybody. I probably also met a few of you. And to be honest with you, normally I would like to do these things face-to-face, but it's very difficult to arrange in a cost-effective manner for all of us to get together. So here's the webinar format. Please do not be fazed by it. Just, get your questions in and ask. I know you're muted, so you cannot interrupt, which I normally encourage, but let's see what we can get through today. If you see the first slide, it's kind of an outline of what we will discuss today, but I would like to say that really this webinar, I consider it an appetizer. There's absolutely no way that in 30 or 40 minutes we can cover all the best and the latest and everything about, designing channels for reaching our SME clients. So what I was hoping to do is go through some basics, go through some rules of thumb, some questions we need to ask ourselves, and then talk about some of the latest upcoming stuff that we may think we are not able to use, but in fact we could use, and we should get into it. I'm quite sure that if you got questions, we can get back to you. You can post your stuff on the SBBN website, or if there is more demand for any kind of follow-up discussion, then we can accommodate it. So let us start with this appetizer thing. So we're going to talk about some basic channel designs, the key questions we should all be asking ourselves to avoid walking down the dark path and getting nowhere. Some rules of thumb that honestly come from personal experience of mine, how to make sure that we will actually succeed, how everything ties back to segmentation, because don't forget, we are talking about 3 webinars here, channels, offers, and segmentations, and how these things overlap. As I said, the latest developments, and making sure that we match the designs to what we got in the local markets, alliances, and the dirty word, regulators, how they can come in and they can change things for us, but how we can actually deal with them. And the picture in the upper right-hand side here, where I'm moving my cursor, is kind of showing you a channel. And really, what we need to understand, first of all, is what a channel is. And the channel is really a way or means of connecting between different things. And in this case, it is connecting us to our customers, prospective customers. So we are talking about this very physical thing of getting in touch, going back and forth, which is obviously very important. So let me, before I get into all of this, give you a personal introduction so that you know who is this guy who is talking to you. That's me on the left-hand side, smiling at you. My past experience as a paid executive, I spent about 30 years working for some reasonably blue-chip companies, Procter & Gamble, Citibank, Royal Bank of Scotland, Cadbury, and so on. I counted at one point, and I worked in 50 countries on 4 continents, so I built up a bit of a background. So my comment is always to everybody that don't worry about any mistakes you may make, any silly questions that you may want to ask, because you know what, I got so much background that I probably asked more silly questions than you can ever think of, and I made more mistakes than you can ever make. And the only thing I try to do is learn from them. So hopefully we'll go through this learning experience now. Right now I'm associated with different institutions and companies, and the Small Business Banking Network is one. I also teach a lecture in MBA studies at a couple of universities, I sit on a few boards, have my own clients, own customers, ranging from World Bank to Morgan Stanley to UniCredit and so on. But I don't think you're interested very much in all of that. You're probably saying, okay, let's get to it. So let's get going. So what are we going to go through? What we will and could talk about is a lot, as I said. There are the basics. There are things about, okay, so when we are looking at channels, is it a channel or is it a business unit? And I will actually have a bit more on that later on, so I don't want to get into that. We need to talk about aligning things, the types, the sales versus service versus operations. Do we own the channels? How do we integrate the different types? How do we make sure that they fit organizationally? So we can talk all about these things, and then there is a hell of a lot more. If you think about it, that we all have what we call kind of like main channels. We have branches, we may have agents, we have sales agents, we have intermediaries, we have remote things. And then we need to talk about the roles of all of these, what they do, how they do it, and kind of opening up for discussion all of that. Now, here is one thing, and I know I'm kind of going through very fast through all of this, but if you go to the SBBN website, there is a white paper posted that actually talks about things like agents and franchises, community banking models, sales agents, and so on. So you can get some background there, and you can formulate your own questions and come back and post it on the site, and I tell you what, I will respond within 24 hours. So we can carry on. We can look at intermediaries, hire Salesforce brokers, and so on, and remote channels. And I got to tell you, one of my guiding principles is always, I want to own the revenue-generating relationship in terms of a channel instead of the cost. And what it means is that we can build all these channels at great cost. We can build branches. We can have service centers. We can have whatever. And then we own the cost. Or we can get into a situation, we can build something where we actually have a contractual setup where we own the relationship the different channels generate, but we do not actually own the cost base of the channels. And these are the alliances, the hired sales forces, the brokers, the franchise operations, and so on. And guess what? Actually, a lot of the remote channels are becoming like that, because setting up remote channels and setting up, internet banking is not that expensive. So we can have incredible reach for very low level amount of money. Now, let's start then with the basics. Now that I told you all the things we could talk about, and we will not necessarily talk about because we don't have all the time, but there are a few basics that we need to always keep in mind. When I look at building up a channel, I always start asking the questions and say, okay, are we talking about a sales channel, a service channel, an operations channel, or a mix of these? And that is a good discipline. Because my experience in most companies, in most banks, is that sometimes these very basic questions are not asked up front. And we build a channel, and we say, okay, good, we build a call center. And the call center should do everything. Well, okay, are we going to use the call center for outreach calls, or are we just going to use it for inbound calls? Are we going to use it to service customers? Are we going to use it to service our own sales agents? Are we going to use it to do the operational stuff of handling credit applications or not? And depending the answer to all of these questions, we need to design everything differently. We need to design the processes, the operational parameters, and then we need to think about how we will fit it into the organization, where they will report to, what our expectations are. So at the end of the year, when I talk to the head of my call center and I say, sorry, dear sir or lady, you have failed, or congratulations, dear sir or lady, you have made it, what will I tell this person? Why did they succeed or fail? So I need to know what my expectations are and how I will coordinate everything and how it will fit in. And then I will need to think about, okay, good, do I have 1 channel, 2 channels, 3 channels, and how I will integrate all of that so that I get the best out of the setup. Then we come to the second question, which is actually really the most important question. When I look at the channel, the first question I ask myself is, do I consider this a channel or do I consider this as a business unit? For those of you not necessarily familiar with the jargon of SBU, SBU stands for Strategic Business Unit. And this, I find, is the most important and most ignored question. Think about it this way. I'm running a pizza parlor, and I know I can make money by serving drinks to sit-down customers in my restaurant. And even though it's a pizza restaurant, I don't make any money on the pizza I sell. I make money on the drinks, and I make money on sit-down customers. Now, it also happens that I have a window looking out to the sidewalk where I sell pizza by the slice. And I look at this window, and I look at the space it is taking up, and I ask myself the question, does it make sense to keep this space dedicated to this window, serving customers walking by on the street where I'm not making any money? Or should I shut the whole thing down and allocate the space to money-making restaurant business serving drinks? And I know you're all muted. Normally I would say, okay, good, so what do you think? But let me tell you how the answer comes around. The answer, as in many cases, is it depends. And what I'm talking about is, if I consider the window looking out to the sidewalk as a business unit that needs to generate profit, and it does not generate profit, I will shut it down, and I will allocate the space to money-generating restaurant business. That's one way of approaching it. The other way of approaching it is, if I consider it as a sourcing channel for new customers, then I will keep it open. Because guess what I'm doing? I am actually getting new customers by trying my pizza at a break-even cost, which basically means zero acquisition cost. Now, we all know that we are like marketing supremos when we can get new customers in at zero acquisition cost. Everybody loves it. So again, how I react and how I go forward will depend on whether I consider this subunit of my restaurant a channel or a business unit. And I lived through this at Citibank because we had an outreach sales force that was helping people by granting loans at different retailers to buy TVs and washing machines and everything. We made no money on them. And my boss told me, we make no money on them for 7 years. We didn't make a penny. We are not going to put any money into them. We are not going to do any product development. We are going to shut it down or let it go away. And I said to him, yes, you're thinking about it as a business unit, but if I told you that I can get 30% of my customers at zero acquisition cost, would you think I'm a good marketer? And he said, yes. And I said, thank you very much, then keep it, because I'm considering this as an acquisition channel, bringing in new customers with all the qualifications, all the information I can get about them, and then I can cross-sell, you know, to 100 degrees out of them or 360 degrees and get a whole lot of extra money. So really, really, it depends on how I look at my channels. Now, having belabored the point, let's talk a little bit about some simpler questions. Direct or remote channels and making the difference between the two. Direct can be impersonal remote or personal remote, but basically it includes a direct contact with the customers. Now, when I talk about remote, it's a more technical definition, doesn't necessarily include a direct contact. And I do have a rule of thumb that I would really please like all of you to remember, and we'll talk about this a little bit later. I always say the best thing for me is if I can acquire my customers directly, I can service them remotely, and I can build relationship in person. So if you think about it, it would mean that I would like to get my customers through, for example, an outreach mobile sales force that is out there talking to them. I would like to service them through a call center or internet or so on, and I will build a relationship with them when they come into my branches or they are exposed to my corporate physical setups. So that's kind of getting into the rule of thumb, and let's get some more questions out of the way. We need to make sure that whenever we build segments, we do it right. You know what? Key question, are the segments separated? When we look at the channel setup, do we know which segments they will serve? Did we plan them like that? And you know, when customers come to me, is streaming in place? Streaming means that I immediately separate people from different segments and direct them to the right contact point within the organization to serve their needs. So a large corporate client is not going to be served through my microfinance channel, even though they may have the same calling number. I will stream them based on some kind of identifier. And guess what? I also plan for migration, because you know what? Life is not stagnant. Life is dynamic. So what happens is some of my micro clients will grow into medium. And some of my NGO clients, who I put into the nice NGO segment, will actually say, hey, listen, I can do this for money. So they grow into or move into a for-profit segment. Or there is a church-based group that I'm funding, and all of a sudden they start up a school and they become an educational institution. So I need to make sure that I can actually transfer people between the different segments, and I can pass them over. And you know what? I, as the bank, own the customer. No single channel, no single salesperson owns the customer. Okay, so that is, you know, my big takeaway from all of this. And then when we get into some of the rules of thumb after all this discussion, I have my own rules of thumb based on experience. And the first one is, you know, I always say every channel, every customer, every segment, and every product or product line must be profitable on a going basis. And this is because, you know, if I set up a channel structure where I use one channel as, let's say, an ongoing acquisition channel at a loss point, then customers will be smart enough to figure out that this is the channel they should deal through, and they will make sure that they put me in a profit loss situation. I don't want that. I always assume that my customers are smart, and if they're smart, they can figure out how to do this. And I must assume they're smart, because if I don't assume that they're smart, they will not understand how good a service I provide and why they should be dealing with me. We talked about acquire direct, service remotely, and build a relationship in person. And the final thing is, you know, whatever channel I set up, every contact is a sales opportunity. Sometimes when I talk to some banks, you know, they would never let me go without saying, even though I call about a very technical issue, like, hey guys, how can I get access to my internet account? Before they let me go, they say, and have you heard about our latest retirement offer? They got it. They got it right. They are trying to turn that service call into a sales opportunity. So that is what I mean. Every contact opportunity is a sales opportunity, and we need to make sure that that's how it works. Now, let's take a quick time out here, because we talked about you know, building relationship in person, and obviously branches are the ones where we do it, but the problem with branches is that they are expensive. Now, we have a whole lot of alternatives, fortunately, We can have alliances with post office and so on. We can have what we call branch on wheels. We can have agents or franchisees. We can have kiosks. We can get into supermarket banking. You know, Tesco is a major food store and they are doing banking. And branch on wheels, if you think that this is something that emerging markets do, well, think again. It's a huge big deal in the United States because before a bank sets up a branch, they would actually, the smart banks, they would actually have a branch on wheels, and then they would track and monitor the traffic at that location, and based on that they will decide whether or not they're justified building a permanent structure there. Okay, so again, branches are here to stay. Don't ever think you can leave them. As much as we talk about alternative distribution channels, branches are here, but there are some interesting variations on branches that we can deal with. And once again, please let me refer you to the white paper where we talk a little bit more about this. Now, carrying on from there, obviously we build channels for the customers and not for us, so we always need to understand how the customer will live the experience of connecting to that channel. And I have loads of interesting personal experiences. As I said, I teach at a university, MBA school, and I call up my own university, my own MBA school, and I get into this IVR, this interactive voice response system, and it gives me 12 options on what I want to do. Meanwhile, I know full well that people lose it after 3 or 4. So if you guys have these issues, don't think that you are doing that badly, because even the best universities teaching business just don't get it. So now I'm dealing with my own university, making sure that we actually do what we teach other people how to do, and we bring down the options in terms of, you know, the numbers you key in down to 3 or 4 instead of 12, because otherwise it won't work. We talked about streaming and migration, and I kind of alluded to the need of serving other channels and intermediaries, because you know what, once I set up a channel and once I do servicing, maybe I need to serve my own salespeople and not just customers. So I need to think about the information I make available and the people I have, and how I will separate out the internal servicing versus external servicing. Sorry, I know I'm dumping a whole lot on you, but please bear with me as we carry through. So now let's get into something even more interesting. Segmentation and how it drives channel development. The grid that you see up on the screen is something that we developed at Citibank when we try to put our business on a strategically well-planned basis. And we said, okay, let's take a look at the people who deal with us. Let's take a look at their families, and on a family basis, let's separate them into 3 layers in terms of wealth. Are they at the top, in the middle, or at the bottom? And then let's take a look at the head of the household. Are they just starting out, or are they in the family formation period, or building their career, or retiring? Because all of these things give rise to different life events, the kind of things that people need to do, buying a house, buying a car, moving, etc. All of these needs mean that I have different ways of tying into them with a financial offer. So I can now segment my offer, and I can now segment how I will deliver this offer, which gets us into the channel domain. All these people have different preferences on what channel they would want to serve them. And obviously everybody would want to have the best personal service, but I know that different ways of delivery cost different amounts of money, so I cannot afford to serve somebody right at the bottom, at the end of their kind of business span, lifespan, with the most expensive channels, because then I keep losing money, and so I have to rethink my business model. So what we did with this model, we looked at all of that, and then we overlaid on this what are the best channels to service these people and what are the offers we need to deliver. And when I talk about this, a lot of times bankers say, okay, Sandy, this is great. These are private individuals, but what do I do about SMEs? And I say, listen, you try to duplicate it in a very simple way. If I'm dealing with micro and small enterprises, normally what happens is they start out and then they move on. And depending on the number of years in business, they will either grow or not. And sometimes it's difficult to track what their revenue is, but I can certainly very quickly track what their employed number of people is. Small businesses, micro businesses don't start out employing 10, 20 people. They start out, I'm the guy who's doing it, so I have 0 employees. But then later on, maybe I start getting people to help me because my business grows. So there is a kind of micro size when I have about 5 people working for me. And then when I'm graduating into the medium size, now I get 20 people working for me or more. So I can have a very simple grid, putting all of that together, and then start thinking about what are the channels I need to use to address businesses here, businesses here, businesses here, how much they cost, what is the efficiency, how I do it. Many companies do it in a very simplistic way. They say, okay, I got large corporate, medium, small, and micro, then here I give them the dedicated service, here I give them account managers who deal with more people, and then I have portfolio managers and the branch. And here at the micro level, it's really just kind of as required, and I'm trying to use as cheap channels as possible. Well, great. Cheap channels is possible, reaching them as fast as possible. Now we are moving into the electronic channels domain. And how do we do that? And how we do that specifically in emerging markets? Because one can say, hey, Sandy, this is all great, but you know, you're not talking about the United States, you're talking about Bangladesh. So how can we use internet and social media in Bangladesh? And I would say, okay, yes, I know that in the States, 80% of the people are using the internet. And if I go to Asia, only about 30% of the people use internet and maybe 15% in Africa. But can we please take a look at the growth rate? And when I look at Asia, over the past 10 to 12 years, internet usage went up 9-fold, 900%. And in Africa, 36 times, which is 3,600%. So the question I would ask myself is, do I want to get in here before my competition steals the market and I establish myself? Or do I want to let the other guys establish themselves and pay a lot of money to try to kind of force my way in it? And I would always vote for the first one. I would like to establish myself first because you know what? It's not that expensive. And when you think about it, we talked about, you know, branches and post office branches. I look at a place like India. There are 155,000 post office branches in India, the highest number in the world, okay? And they reach almost the whole 1.2 billion population. But you know what? There are also 137 million internet users in India. So if I set up just one internet site that works well, I can reach as many people as I could reach through more than 17,000 post offices. And to set up the right internet site, I would bet is much easier than striking a deal with the Post of India. So let's carry on now that we talked about this. Some other statistics. 13 of the top 20 internet markets in the world are emerging markets. And they make up about 50% of all internet users in the world. And a very scary statistic that we need to keep in mind is that with all the information going around, almost 60% of the buying decisions that our potential customers make are made before we had a chance to talk to them in person. So we need to think about that, and we need to think what we can do to make sure that we influence them before they talk to us. So we can have an outreach sales force to get to them early. We can have word of mouth marketing, or we can go on the internet and optimize our site for search engine so that when they go on and they start searching, then they get us first, and then we can have alliances and get together with different search engines, Yahoo's or whatever, so that when people get into questions that they want to ask, then we will come up and they will be redirected to our site. So let me give you some examples of how this actually works in real life, because obviously depending on which market I'm operating in, I have to do it differently. I have to understand my market, and you guys are operating in your own markets. You understand it a hell of a lot better than I ever could. So what do we do? So if you look at a place like India, well, guess what? The red tape is a huge big issue. So what do I do as one of the leading banks, ICICI? Well, I say, okay, red tape is a big issue, so I need to help my startup companies with red tape. And I'm providing value added like this. So I'm going to set up a website where I'm going them over 4,000 frequently asked questions from the legal domain. What the answer is. I give them 4,500 business forms. I even give them draft agreements and circulars and updates to actually deal with all of that red tape. If I go to another market, then, and here I picked Central and Eastern Europe, I may want to do it differently. An example, there's a company called Tacticon that provides support for small businesses. There is a media outfit called HVG, which is kind of like the Economist of Hungary, and there's a bank called OTP, which is in Central and Eastern Europe. So what I could do is set up an alliance where Tacticon provides the content, HVG provides media support, and OTP funds the logistics of, for example, of a major conference series, and also gives financial advice. So what I do is I have the guys from Tacticon go around the country giving advice about how to start up your business, and I have my guys from my bank there immediately tying financial services into that. And then what I will do is I will actually follow it up, because what I will do is then I will get the best success stories from these guys who actually took my advice and got somewhere. And I will then go into the internet, I will go into social media, into Facebook, into everything, but I will not talk about the bank. I will talk about the success of these entrepreneurs. And as a by the way, we'll mention how the bank helped them. Because people are not interested in learning about banks, they're interested in learning about other people who were struggling with the same issues, how they made it successful, or how not, what the learnings are. And that's what these guys did. And let me tell you, it worked like a charm. It was really, really good. So let me give you just one interesting tidbit. Now, if I was in your shoes and I'm looking at the market, in most emerging markets, the agribusiness is a big deal. So is there anything I can do targeting the agribusiness segment in a way that I can use electronic media and content marketing and social media, and it doesn't cost me a whole lot? Well, you know what? There are people out there who are supplying seeds to these guys, who are supplying equipment to these guys, who are supplying a lot of services and goods to agribusinesses when they start up. And let's pick on Monsanto. Monsanto just bought Climate Corporation for about $1 billion. This was about a week ago, okay? Monsanto said that they will use this corporation to provide climate and related advice to farmers around the world in all markets, including emerging markets. They are very aggressively pushing branding on genetically modified crops on their new decal brand, so they are investing in getting there and getting in touch with these people. And they are very aggressively building an e-channel delivery and value-added services. So I tell you what, if I was a bank, the first thing I would do is I would say, hey, listen, let me talk to these guys at Monsanto because they are trying to reach this segment. If the agribusiness segment is one of my target segments, I'm not going to spend, lots of money building channels and ways of reaching them. I'm going to team up with Monsanto. Let them spend all this money, but let me then come in and link into their delivery and tell Monsanto, and by the way, I will provide financing and financial advice for all these people who will be buying your seeds, and what you need to do is give me a slot on your website and in your social media applications so people can have a direct link to me, okay? And then later on, maybe we can start sharing information about the people you reached and I reached. And bingo, I got an incredible overnight reach of my agribusiness startup entrepreneurs, the small farmers. Okay, you heard it here first, so don't quote me on that, just take it away as a potential advice. Having said all those optimistic things, I wanted to finish up with potential downfalls, downsides, and regulatory issues are a big deal. It would be really nice to pick anything up that works in one market, bring it into my own market, but you know what? Sometimes it just doesn't work. M-Pesa, which is the biggest success story in Africa, starting from Kenya, is actually not allowed in India. Why? Because in India they will be regulated as a bank and not as a telecommunications company, and therefore they have to go through hoops, and therefore they are regulated out of the market. Or I look at something like a Bendigo Bank, which is a bank in Australia, and they have branch agents, franchisees, set up in the outbacks servicing Aboriginal people. The government thinks it's a great thing, so the Australian government is helping them and supporting them. But if you want to take the same business model and move into Asian markets where it could work well, guess what? It doesn't work, because setting up these franchise agents, again, would need individual bank licenses, and you're basically regulated out of the market. So we need to be very careful that we design everything for the local market. We understand the local regulations. We don't just assume that things will travel. Luckily, however, we shouldn't be discouraged, because you know what? We can use some creativity. So what's the big deal? Okay, so M-Pesa banking doesn't work. Well, mobile banking, which is at the essence of M-Pesa, is not actually M-Pesa. It's just something different. So maybe I'll be able to do SMS banking or mobile banking without taking the M-Pesa model. I learn from these guys, and then I modify it for my market. So let me tell you, I'm actually paying in Hungary for most of my parking by SMS, because there is a system set up. I can send an SMS, and then the parking fee gets charged to my telco account, and then they will settle it with the parking company. Nobody needs a banking license. I also get payment notices, amounts due. I also get internet security updates through SMS, and a lot of things that I can do with mobile banking without actually getting into the M-Pesa model and going head-to-head with the regulators. So what I would like to leave with you as a thought is, if you say, yeah, this is great, Sandy, you're talking about SMS banking and mobile banking, all of this stuff, how would it work? Well, you know what? Of the 7 billion people in the world, 3.5 billion have a toothbrush. And you know what? 4 billion have a mobile phone. So power to us to take advantage of what is out there. We don't have to buy them mobile phones. They already bought it. We are not paying for the channel. We're just taking advantage of what is available. Let me sum up so that we don't run out of time too badly. So we talked about channel designs, the basics, some questions we need to ask ourselves, some rules of thumb to apply, how segmentation will start interfering with our design and why we should take it into account, how we can actually use some of the latest and best electronic, internet, social media type of approaches in emerging markets, why we should be using them, how we need to make sure that we are mindful of the local regulatory issues and don't just blindly try to adopt anything, and how we can use some creativity to get around these issues. And on that cheerful note, I thank you very much for bearing with me. I know I dumped an awful lot on you, But trust me, I could talk for 2 days about all of these things, and we can have fun times, or we could have fun times, you know, talking about how to get the most out of channels and how to plan and integrate them. But I will stop now. I thank you very much for your attention. I put up my email address if you have any questions later on, or Jessica's email address and phone number. And then I would like to pass it back to Jessica to open it up for general questions. So Jessica, would you please take it up from here?
Great. Well, first of all, Sandy, thank you so much. And this is a wonderful introduction. And I'm so pleased to say that we do have 2 more sessions coming up with Sandy. So we will be building on this series. So Sandy, if you want to take us to the next slide, great. So you can see that on December 10th, we'll move more into the SME offers and products, and then in early January, we'll be focusing more on segmentation. So this is a great opportunity to build on what we've just discussed. So we are getting a few questions, so please feel free to send in more of your questions right now. We'll take questions for about 10 or 15 minutes. And one thing we'd also like to ask is that you take advantage of our discussion board to post any key issues, insights, questions, as Sandy would definitely like to customize the next 2 webinar sessions. So if there are specific issues that you'd like him to focus more on in those, please don't hesitate to either post that on the discussion board or contact Sandy or myself directly. So Sandy, one of the main questions that we have coming in really goes to what is the best way to acquire new SME clients? So, you know, you've talked a lot about these different channels. How should our financial institutions begin to build these channels to acquire new SME clients?
Yeah, very specific question, and the standard answer that I always always give is it depends. But there is actually there is a 2-part answer to that single question. The first part, it depends, because it really depends on your individual market and setup and the dynamics of the market. So you need to look at the revenues and the costs and so on, and do your calculations. But the second part of the question is, to be honest with you, I don't think that there is a simple answer like, okay, use this channel, this is the best. What I found works best is when I look at the channel setup I have at my disposal, and then I build my acquisition process going right across the different channels. And I start with the least costly channel, but a channel that may not be the most efficient, but requires the least amount of money from me, and then I step up with a process that links into the first step. So, and then I step up again and bring in the third channel. So to make it very specific, for example, I could have a direct mail approach or maybe direct email approach, which I know can reach a lot of people but doesn't bring back a lot. But then those people who responded, I can then do a phone follow-up with, and then I can do a personal sales face-to-face follow-up with. So already you are seeing that I'm combining 3 different acquisition channels, and I'm building a process that goes through the different acquisition channels. And in my experience, what works the best is always not to be fixated on using one channel for this and another channel for that, but to look at what they're best for and then layer in the different channels, the different approaches, and coordinate an acquisition process right across all of them. Because in some markets, maybe I have an outreach sales force, a mobile sales force, and it's best if they talk to the customer first, and then it comes back to the call center, and then it goes from there to a branch interview. So it's 3 different channels layered in a different way. I always need to decide based on the market, but I would always look at multiple channel approach, and I would always try to layer them in one on top of the other and coordinate the process right across. So it's not like which is the best channel, but which is the best way of layering in different channels and what is the sequence depending on my situation. And I hope that answered the question.
Yeah, that's great. That's very helpful. Sandy, I think a lot of our participants would also love to hear you speak a little bit more about setting up the internet and social media for sourcing new customers. So can you tell us more about how you would approach this and what are some of the first steps that you would do?
Yeah, okay. And actually there are, again, couple of basic things. The first thing to keep in mind is, as I said, people are interested in people like themselves. They are interested in stories. They like to be entertained, not educated. By and large, people are not really interested in banks, okay? So what I need to do is I need to make sure that I grab their attention, because out in cyberspace, getting the attention is the first hurdle. And getting the attention, there's a whole area of marketing that deals with that now, and it's called content marketing. And if you remember what I said about this bank in Hungary that started with the conference series and then followed it up, well, what they were doing is they were creating content that they put out there that was basically interesting stories about people whom you could relate to. And then the financial advice and the banking support kind of came in as a secondary, but people actually listened to that. But they grabbed everybody's attention based on real interesting content. So essentially the thing to do is to pay attention to what is called content marketing. And keep in mind that your target audience doesn't necessarily want to be educated by a bank. They would like to hear about stories about other people who were like themselves and how they did it. So the first thing I would do is I would pay a lot of attention to creating content that can really grab people and start putting that content out into cyberspace to generate the buzz and generate the information going around, the word of mouth and everything, so that I can start diverting traffic to my specific internet or social media sites. Then the next thing I would do is, now that I got the basics, which is content marketing and understanding what people want, that they want, you know, the funny stories are not necessarily my offer, so I need to kind of pitch it as part of the funny story. The next thing is to actually understand the nitty-gritty of how to do it. And those of us who are working in this domain would know that there are things to watch out for, and these are things like, you know, the screen formatting. Many times, you know, companies go out there and they say, okay, good, I set up a web page. Well, you can set up a web page, or you can set up an auto-formatting web page, which means that the web page will actually format itself differently if somebody logs into it on their mobile phone versus somebody logging into it on their iPad versus somebody logging into it on their PC. That's a small difference. In terms of cost, it would probably cost you, I would say, 10 to 15% more to have the variable formatting display, but it is really worth it, because otherwise, you know, the content you put out there is really easily accessible only in one format, but not in more. So I get the basics right, which is the content marketing, and then I worry about the executional pieces, which is, you know, the formatting, the auto-formatting of the display, the links between the different setups I have out there, which means that if I have any information anywhere, then I should have hot links that people can easily navigate between that and my content-rich website, for example, so I can do the bait and switch routine, they read the funny story and they go, wow, I want to hear more about this, and here's the way I can just click on it. So I put those things in, and so I basically got the content right, and then I get a good practitioner to do the execution right, the auto formatting, the links, the the flow of connections between different sites. That's how I would build it. So start with the content, get it right, and then worry about the execution and get somebody who knows how to do it. And there are people out there in all over the world who know how to do this. And please invest the extra 10–15% of money to make sure that your content is easily reachable from any channel.
That's great. Very, very, very helpful. I'd love to hear you speak a little bit more about regulations and how regulations can block the transfer of innovation. Could you tell us a little bit more about how the financial institutions could deal with regulators and how should they address that issue? We'd love to hear any case examples, best practices.
Yeah, I was kind of half expecting the question. it normally comes up, but you know, the basic thing with regulators is what we need to keep in mind is I guess two things. Number one, they represent the government. So however big we are as a bank, however good we are, how much more we know than them, they actually have the upper hand. So it's not a very good idea to aggravate them. And related to that is the other thing that, you know, when we deal with individual regulators, we are at the end dealing with individuals. So let's think about them as individuals, what they may like, what they may want, and how we can help them with that. And if we can link into that mindset, then we can build a cooperation with them. So I always say it's not a good thing to go head on with the regulators. That tends to be a losing proposition. What the winning proposition is, if the regulators say, you know, look, this won't work, then let's start the discussion. Let's explain where we are coming from. What we need to know is that regulators, even kind of banking regulators, and whatever they may say about themselves, in fact, their knowledge base is no match for our own knowledge base. We are the professionals. We know it better. But that is not something I'm going to rub their nose into it. I'm not going to aggravate them with that. What I will try to do is work with them and bring them along using my background knowledge. So as Jessica is a specific example, I lived through some of these regulatory interactions, and one example is we tried to introduce branch franchising in Hungary, in Central Europe, which at that time was an emerging market a few years ago, and regulators really didn't have a clue about this. So what we did is, instead of telling them, you know, how it needs to be done, blah, and look at how it's done in Belgium and the US and blah, no, we said, okay, good, we are trying to build this model. Could you please come and help us? And we will build it together. So they said, oh, wow. Yeah, okay, sure, we'll go. So we started building the model together. We had all the information, and we very nicely held their hand and walked through this learning curve. And at the end of the day, when we came up with the model, which was our model, they actually felt they participated in all of that. They understood why it worked the way it worked. In some cases, they actually had some ideas why it may not work, and we took those ideas and we modified the model. But at the end of the day, the model was 90% ours, 10% of the regulators, but they felt that they owned that model. So the regulatory authorities then said, okay, if you want to do branch franchising or branch agent setups, we will now regulate how you should do it, and this is how you should do it. They, in fact, mandated our model. which was great for us because immediately we were 100% compliant, and everybody else who wanted to do anything needed to come in line with our kind of thinking, and it took them like a year to 2 years to do it. And then it was actually even better because then we started expanding this model and moved into different markets. And when we wanted to do the same thing in Poland, our approach was in Poland was we told the regulators that, you know, we want to work with you, but we already had a case in Hungary and we jointly built this model in Hungary. So you may want to talk with your colleagues in Hungary. So these regulators, they love to talk to their own. They don't want to talk to the industry to get the guidance. They want to talk to other regulators. So the guys from Poland called the guys in Hungary. And the guys in Hungary said, oh yeah, you know, we really helped these guys to do the right thing. And the model that we came up with, that we implemented in Hungary, is the one we believe it would work. We can send it over to you. And the guys in Poland said, oh yeah, send it over, save us some time. So it was the government in Hungary that sent it over to the government in Poland, which immediately accepted the model, saved us a lot of time working with them, and in fact, again, we got what we wanted. So the net of it all is don't ever get into a controversial relationship. Deal with them, understand that it is not their job to know your business. It is your job to educate them about your business, but educate them in a positive way so they don't feel that you're lecturing them. They feel that they are partners in the development of the new regulation. And when you do that and you invest the time and swallow hard in the beginning, then you invest maybe 1 or 2 years, but at the end, you get the regulatory environment that you want, and it actually gives you an advantage because you know the regulatory environment and all your competitors will not. They will have to learn it, and they will have to go to the regulators, and they will be turned down unless they're using your model, which they don't know. You know, they don't know, so you built yourself a competitive advantage. So that's kind of how I think about working with regulators and how actually using the regulatory cooperation to build a competitive advantage for my new channel setups. And I hope that kind of illustrated the point.
Yeah, that's great. Sandy, we have time for just one last quick question, and we had a couple other questions coming in, so we will try to post those and answer those on the discussion board. But maybe it's just a final question. If you could tell us if you've seen any interesting recent innovations in channels, both in the developed world and then in developing countries as well.
Okay, I think the biggest deal is not kind of individual channel innovation, but innovation in approach to channel development. I think what is happening is there are some fads out there, things that are the flavor of the month. And normally what happens, these things get picked up and then they run up the flagpole and everybody is going, oh wow, this is great, we shouldn't be left off, and then they collapse. And then smart people come in and pick the pieces of what was right about that model and implement it into the existing model. So if I wanted to pick one significant trend that is just starting, and it literally is like now, it is just starting, I would say is the move from social media to social business. There are a lot of agencies out there flogging social media, and we hear about Twitter and Facebook and this and that and how we can use it. Well, guess what? The question should be, does it make money for me? So social media is nice, but social business, where I can make money with all of this, is another thing. So smart companies and smart consultants try to figure out what parts of the social media infrastructure I can use for myself and how I can integrate it into my existing channel structure. So I'm not going to throw away my channels. I'm not going to build the next Google, because I'm an existing bank, so I need to take whatever is the best but not throw away whatever I have as the best. So I start picking the best of social media, integrate it into my own setup, and treat it as what I call the social business. So I think this is, again, if you want to be at the right of the cutting edge, that is the current trend, and it literally is like 6 months ago when it started, and now it's coming up. Companies are trying to figure out how to actually make money on all of these things that are out there, look wonderful, but so far haven't really been able to deliver good money. And that's where some of those mundane things like content marketing and format development and so on, that was my answer to the previous question, start coming in. That's all about social business as opposed to social media. So that would be one key thing. I have another 2 or 3, but I'll stop here for the sake of time.
Well, wonderful. Well, again, Sandy, thank you so much for a very interesting webinar. We, again, would like to ask if you have any follow-ups for Sandy or SBBN, please do feel free to email us directly or go ahead and post on our discussion board. And we invite you to join us for our upcoming webinars in November on advancing women entrepreneurs, and then the follow-up series with Sandy in December and January. So thanks again, everyone, and please do feel free to access this webinar online in the coming days if you've missed any part of it.
And I thank you guys all for being with me, and I do hope you got some good ideas.